At a time when investors are confronted with market volatility and a variety of challenges fueled by the uncertainty of inflation, unsettled geopolitical tensions, and economic pressures, Justin Klein and Steve Peasley stand ready to take your finance and investment questions and share their unbiased answers. This is InvestTalk, independent thinking, shared success. InvestTalk is made possible by KPP Financial, a registered investment advisor firm serving clients throughout the United States. The clarity for your path forward starts now. Here is KPP Financial President, Financial Advisor, Steve Peasley.
Good afternoon, everybody, and welcome to Invest Talk. I appreciate you being with me here on this Friday, September 16th, 2022. I'm Steve Peasley. And of course, I look forward to doing this podcast, Invest Talk podcast, every time I get a chance to do it. And I really enjoyed listening to you, answering your questions. Any financial or investment questions are welcome, and that's what I like doing. The phone number never changes, has never changed in 23 years or so. And it's open 24 hours a day, 7 days a week. 888-99-CHART. 888-992-4278. You can call and ask any of your live questions right now. And we're always live 4 to 5, Monday through Friday, 4 to 5 Pacific time. And I got a lot of material to go through today, as usual. Friday is usually a pretty busy day. And we're already halfway through September, and that means we're almost into the quarter, third quarter. Fourth quarter is coming up, and so is fall. We're not that far from fall. I love fall. Anyways, it is only a couple of... Time does move fast, and there's only a couple of weeks left in this quarter. So we need to think about what's going to happen in the market in the fourth quarter. Remember, the two middle quarters of the year are usually the two worst quarters of the year. And the last quarter and the first quarter of the year are the two best quarters of the year. Now, of course, we are in a bear market, right? We all kind of assume that we're in a bear market. Does that change that? No. That just means, we probably have gone through the worst part of the bear market, but it's not done. And, of course, it could not be worse. It could get a lot worse. It could. I'm just not sure it's going to. I don't think there's any big rush to put your cash to work at this point because it is very, very possible. Remember, the Fed's going to raise rates next week. I think it's next week they meet. And it's going to be 0.75% or more. So, a raising rate environment makes for a very difficult investment environment to be in. I mean, it's difficult, very difficult. I can give you some stats. I have some stats on what all the major sectors have done so far this year, 2022. You know what the worst sector was? You know what the best sector was? There's only two sectors that rose so far this year. Only two. Do you know what that is? Well, I'll share that later on. My focus point today concerns a story behind, with more Fed increases likely, how could these higher interest rates affect your wallet? And they do. They definitely affect your wallet. Who do you think is paying for it? Not only do we pay for it by higher interest rates, we also pay for it by an economy that's going to be slumping more. I think it's going to do that. So that's what we're looking forward to. Not a lot of exciting news, really, but that's okay. I also want to talk about the FedEx. FedEx had a really bad day today. UPS didn't have a very good day either, but FedEx was just dumped. I want to talk about that and get into it a little bit. Stanley Druckenmiller. Druckenmiller? I don't know how to spell it. Stanley Druckenmiller. I know the guy. He writes a lot. He's a very smart fella. I usually read most of the stuff he puts out. He thinks. What do you think he thinks the next 10 years are going to be like for the stock market? This is something I think I need to share with you. His opinion about that. And Russia economy won't recover to pre-invasion level, that means before they invaded Ukraine, for a decade. For a decade. What a stupid move on their part. I mean, from an economic point of view, from a humanitarian point of view, what a stupid move on their part. Anyways, we'll talk about that a little bit, and I want to talk about the sectors as well. That's what we're going to discuss, but of course, you come first. Your calls come first. And we do have some voice bank questions ready to go, one on Stanley, Black & Decker, and the other one on Advanced Auto Parts. So we'll get to those too. And of course, today's Friday, and as Friday, you know I talk about the KPP Premium Newsletter, and that will go out tomorrow in the email news box for everybody. So we'll do that too, I'm sure, about the halfway point. So though we're busy, it's a busy day, but I want your live calls. The number is 888-99-CHART. The market fell again. The Dow was down 139, the NASDAQ down 104, and the S&P down 28. It was a lot worse than that during the day. That's actually came back pretty good from where it was. So, interesting day, especially for Friday. You would think, Friday with, not a lot of happy thoughts with the Fed raising rates, that it would not recover anything today, but it did, surprisingly. So we'll see. That's how the market did. We'll see. Let's get right to our first question from 888-99-CHART.
Hi, Dave from Ohio. Yeah, really appreciate the podcast. I listen every evening. I'm looking at a stock, Stanley Black & Decker, symbol is SWK. It's almost at the 52-week range, pays a decent dividend. I know it's a cyclical stock. Your thoughts and what would be a good entry point? Thanks, and I'll be listening.
Okay, when you say 52-week, you probably meant 52-week low, I'm assuming, because it has fallen sharply from 200 points a share down to $85 a share. It's out of New Britain, Connecticut. It's SWK, Stanley Black & Decker, manufactures hand tools for the professional, industrial, and consumer markets. It's a $13 billion company, so it's fairly good size. This year it's going to make $5.54. That's about half of what it made last year, by the way. Half. Next year it's going to bounce up a little bit to $6.81. Those are the estimates. The dividend is 3.7%. 5-year PE range is 8 to 24, and right now it sits at 10. Okay? But remember, it's going to make $5.54. So next year, by the end of this year, that PE is going to be higher than that, right? Because that's $55 and it's an $85 stock. So I think it's not cheap enough. That's what I think. Even though it's fallen from 200 all the way down to 85, I still don't think it's cheap enough. Now, sales are doing pretty good. Sales are decent. So that's good. I mean, that is very low. That's good. Cash flow is very high at $14.36 a share. Very good. Return on equity is pretty good at 15%. Management owns 1%. Mutual funds are sellers in the last year. Went from 1,900 to 1,700. See, and of course those people are driving the stock down. I think it can go lower. That's what I think. I don't think you'd be a buyer at this point. I do not. Okay, appreciate the call. That was SWK. We are headed into a break. Justin and I are happy to play your recorded voice bank questions, but we love taking live calls. So please call us. Our number has never changed, and it never will. So 888-99-CHART.
Why do listener questions make InvestTalk better?
Which of these would you recommend?
Because each caller presents fresh questions in their voice.
I was curious if you still think aluminum has a ways to go from here.
When do I know the right time to take profits?
Should I be looking for an exit? Should I be holding here?
And listeners instinctively realize that InvestTalk uniquely offers a welcome dose of investing satisfaction.
I think you have a terrific show, and I've learned a whole lot.
Hey guys, love your show. I've been listening for several years now, and I've learned a lot.
Justin Klein and Steve Peasley understand what investors need and want.
I would look at it from a tax perspective. If there's no tax implications, move on, find better ways to use that money.
I'm going with the odds. I think a half position now would at least get you in it and get you watching it so you won't lose track of it.
Don't forget to call InvestTalk, 888-99-CHART.
Now, each time I host the InvestTalk podcast, I have the satisfaction of taking caller questions and then breaking down the often complex dynamics involved. I make them into easier to understand elements. Each question is tackled live without pre-screening, and some topics are more challenging than others. And that's a good thing, because it allows every InvestTalk caller to shape the content of the podcast. If you've never called, don't hold back. You can leave your InvestTalk questions on the 24/7 Anytime Listener line at 888-99-CHART.
Okay, as you know, if you've been a listener for any length of time, on Fridays I usually run down, a quick rundown at least, on the key benchmark numbers, such as the 2-year Treasury yield is 3.867%, 3.86. Now, 2-year is 3.86. The 10-year is at 3.45. So that's an inverted yield curve when the longer bond is trading at a lesser yield than the short bonds. That's inversion. What happens when you have an inverted yield curve? You get a recession. Okay, so and that's of course where we are. Now, last week the 2-year was at 3.56. Now it's 3.86, and the 10-year last week is 3.3. Now it's at 3.45. So they're not improving. That inversion is not improving, not closing, not heading back in the right direction. Gold was priced at $1,672 an ounce. Last week was $1,715. So 3 weeks ago, it was $1,736. Gold has not worked. And what's really, disappointing to us and frustrating is inflation is super high, right? Gold should work in a high inflation environment. It's supposed to work. But the dollar got stronger, has gotten stronger all year. Very strong. That does not push gold prices up, pushes it down. And the stronger dollar is defeating the high inflation as far as gold is concerned. Gold is not moving up. It hasn't collapsed, but it's softened. I mean, it's kind of an interesting dynamic that's going on there. Oil, $85 a barrel. $85 a barrel. Last week is $86. I'm leaving off the pennies. 3 weeks ago is 92. 6 weeks ago is 89. 7 weeks ago, 99. Remember, it's 85 now. Okay, it was 97 9 weeks ago. 10 weeks ago, it was $104 a barrel. 104. And if you go all the way back, 24 weeks back, $113. So it's come off 113 to 85. Okay, so remember, it was in the mid-60s for a couple, 3, 4, 5 years. And now it's 85. So it has risen. The national average for a price of a gallon of gasoline, $3.69. I wish I could say that for California, where it's $5.44. That's just an average. It's more than that in many places in California. Okay? So just for comparison, Oklahoma is $3.35 per gallon. Pretty frustrating. Those are some of the numbers. Let's go to Craig in San Francisco. Craig, how you doing?
Great. How are you doing?
I'm doing great. Appreciate the call.
Nice listening to you guys.
Thank you.
So I had a question. I'm very close to retirement, and I have a option for a lump sum distribution or quite a few other annuity options.
Okay.
I was wondering in today's investment environment, how do you feel about that? I'm tempted to go with the lump sum because of traditional increases in markets and stuff like that over the years. But do you think there's any big change happening, or just temporary, or what?
Well, I do think I'm going to talk about Stanley Druckenmiller today, and his prediction is the next next 10 years, the stock market is going to be fairly flat. Now, he doesn't, just because that's his position, even though he's a very smart guy, doesn't mean it's going to happen. But, I would take that in consideration. And what you do is you look at the lump sum, factor in a conservative return, maybe 5%, okay, 6% instead of the normal market 9%. And then take a look at the annuity. What are they offering in their return? How much are they paying over that same period, 10-year period, or whatever period you want to take? And see which one pays more. Usually the market pays more, but you got to take market risk to get it. So, but interest rates, bond rates are going to be high for the next 10 years. So that's a conservative place to be. We're headed into a break. It is Friday, almost the end of the week. Give me a call, 888-99-CHART.
InvestTalk is here to help. And when you download the free InvestTalk podcasts, don't forget to rate and review. The phone lines are open, 888-99-CHART.
Love to talk to you. Give me a call. Ask any financial questions you want. My focus point today concerns a story with more Fed increases likely. Well, I mean, it's almost certain, right? It's almost certain. How could these higher interest rates affect your wallet? And it's pretty simple to look at. All you do is look at a mortgage rate. If you're looking to buy a house, boy, if you didn't refinance when interest rates were 3 and 4%, you're way too late. It's not going back there for decades, in my personal opinion. We would have been there, done that. I don't think it's going back there for a very long time. Okay. So you're too late. So it's mortgage rates obviously is one thing that's going to affect us, especially if you have an adjustable rate. Hopefully you didn't. You locked in a fixed rate, fixed mortgage. But that's one thing. Credit cards, debt on credit card debt is going to go up. Any debt you're going to incur is going to cost more. It's simple as that. Any debt that you put on, so don't be in debt. That's key. If you want to be rich, you can't be rich by being in debt. You got to change your outlook. You got to change your thinking. Okay? Instead of being an interest payer, you want to be an interest earner. Not a payer, an earner. You want to earn interest on your money. Not pay interest to somebody else who's earning interest on their money. Okay? Why do you think banks are so rich? They charge interest for the money they lend you. They're rich. They have, kind of obvious. Okay, so those are the areas are going to be. The Federal Reserve is going to raise the rates another 0.75% at least. There's speculation it might be higher. I doubt seriously it'll be lower from the numbers we got this week on inflation, which are very high still. So I doubt it's going to be lower, and the Fed probably won't stop there. I don't see them stopping, not yet. Now, my worry is the Fed, in their effort to control inflation, will definitely push us deeper in recession. That's what they're doing it for, to slow the economy. That's what they say. We want to slow the economy. What does that mean? That means stop it from growing. That means we want some more unemployment. We want we want pain in the economy. Pain for workers, pain for corporations, and they're going to get it. The old saying, don't fight the Fed. It's not a smart thing to fight the Fed. Don't fight it. You have to adjust to it. It's not that hard to adjust to it. We're all adjusting to it. You have to. We don't have a choice. Let's go ahead and grab another caller question from the InvestTalk Voice Bank, 888-99-CHART.
Hey, I'm interested to invest in this ETF FIW, but the expense ratio is too high. So I'm thinking to buy some of the top underlying stocks. Can I have your opinion on that? Thank you so much. Bye.
Okay, this is a FIW, First Trust Water ETF, Exchange Traded Fund Seeking Performance, corresponding to the Clean Edge Water Index. And of course, being an index means it's full of stocks that are focused on this industry. So I would prefer you to pick stocks out, not buy the ETF in this industry. And you're probably going to have to overpay if you want to get into them because everybody wants to get, that's clean water is I think, going to be extremely important in the future. It's important now, but I think it's going to continue to be important. This stock hasn't really sold off very much, really. I mean, it was in what, $95, $96 at its high back in December. Today it's $76.81. So that's not terrible. It got as low as, what was that low there? 85, 90. So, I think that it looks like it might have hit its bottom. But I think, again, I'm telling people to be patient. I think you still need to be patient. There's no rush to get into the market, but I would look for the individual stocks in this sector, not the ETF. Because I think the ETF, I agree with you, I think it's a little too expensive. Okay? Thanks for the call. Appreciate it. And remember, that ETF symbol is FIW. Water. We're moving into a break. It's Friday, so I'll share highlights from the newest KPP Premium newsletter. That will be in just a few minutes, by the way. My InvestTalk phone lines are open, 888-99-CHART. Okay, so give me a call. Do you know what two industries this year are up? Only two. Utilities, 3.4%, and energy. Energy is up 41%. All the other industries are down for the year. Down for the year. So, what was the worst industries? You want to know what that one is? Worst industry. Worst is communications, down 34%. Okay, and then infotech, 26%. Consumer discretionary, 23%. Real estate, 23%. So those were kind of the worst industries. Consumer staples, not too bad, down 8%. Consumer discretionary, well, that's high. I'm looking for the lowest ones. I just gave it to you. 8. Financials down 15. Not too good. Not great. Okay, we're moving to break. It is Friday, everybody. 888-99-CHART.
If you don't know the numbers, you don't know your business. That's true when your business is growing fast, and even more true when there's a lot of uncertainty. Inflation is running rampant, supply chains are clogged, and labor market is tight. What does that mean for margins? But not every business is in the dark, and NetSuite is helping business owners everywhere. Over 31,000 businesses know their numbers because they use NetSuite by Oracle, the #1 cloud financial system. NetSuite gives you visibility and control of your financials, planning, budgeting, and of course, inventory. So you can manage risk, get reliable forecasts, and improve margins. Everything you need, all in one place. In 2022, profit is the new growth. So NetSuite helps you identify rising costs, automate your manual business processes, and see where to save money. Know your numbers, know your business, and get to know how NetSuite can be the source of truth for your entire company. Right now, NetSuite is offering a one-of-a-kind flexible financing program. Head to netsuite.com/investtalk right now. netsuite.com/investtalk. netsuite.com/investtalk.
Get 30% shorter average wait time when you buy and book online at discounttire.com. Discount Tire. Let's get you taken care of.
InvestTalk is always made better when our listeners contribute their questions. So tell your friends and family members they can interact in real time with Steve Peasley and Justin Klein during the InvestTalk live stream program between 4 and 5 p.m. Pacific Time. Or they can leave their questions anytime, 24/7, in the InvestTalk voice bank. Remember, for live or recorded questions, the number never changes. 888-99-CHART.
888-992-4278. I'm Steve Peasley. Love to hear from you. The KPP Premium Newsletter was finished today, and it will be distributed to subscribers. So I have a little preview for you. In the market conditions section, I explain the big news this week was the August reading of the Consumer Price Index, CPI, which tracks a broad swath of goods and services. The CPI increased 0.1% for the month and 8.3% over the past year. So it increased 8.3% over the last year. Inflation. And excluding volatile food and energy costs, CPI rose 0.6% from July and 6.3% from the same month a year ago, 2021. Economists are expecting the headline inflation to fall 0.1%, not go up, and the core to be up 0.3%, not 6%. So it was kind of a not very good day, and the market responded accordingly. Okay, the market expected and had trades in to have inflation ease, and it went. It did not. It did not. Now, the very next day, you had the PPI, which is a gauge of prices received at the wholesale level, Producer Price Index, wholesale level, not the retail. It did decline 0.1%. So this was in line with expectations and probably tell us that inflation is going to ease a bit, okay? Because the wholesalers have cheaper prices, and they'll pass that along to the retailers, the manufacturers and such, and to us eventually. So hopefully we'll start to see some easing of inflation here. So that was in the newsletter. The Treasury yield surged. The 2-year note was 4%. I gave you those numbers earlier. So this inflation news, which was not a happy place, made yields go up. Now, of course, everybody's anticipating what the Federal Reserve is going to do next week, and they will increase them. Retail sales numbers were better than expected in August as price increases across a multitude of sectors offset a considerable drop in the gasoline prices. The Census Bureau reported Thursday about that. This is where they reported on. Everyone will be anticipating next Wednesday when the Fed will decide on how much to raise the federal funds rate. Okay, and of course I said the expectation is for 75 basis points or 0.75% interest rate percent. Okay, 75 basis points equals 0.75%. Okay, 100 basis points is 1%. Because you're going to hear a lot basis points, what they talk about. That's what you hear and read, but you can easily translate that into a percent. Okay? Now, since the market's already priced in that move, it will be more focused on the tone of what the Fed Chairman Powell will say. What is going to his statements? Is he going to come out and say, we are going to keep increasing as fast as we've been increasing because we're going to kill the inflation? I mean, if he says he's very hawkish, that would be very hawkish. The market's not going to like that. They're hoping for a little, I don't know, backing away from being so hawkish. I don't know if the Fed's going to do that. I don't think they will. I think they're still going to be pretty hawkish. So, in the stock ideas section, we usually give you 2 ideas. The money market mutual fund with an investment strategy that seeks to provide current income while maintaining liquidity and a stable share price of $1. That's what money markets do. The fund invests primarily in high-quality, short-term money market instruments. So your money market, you think it is a money market fund. It's a mutual fund, everybody. Money market fund. But it maintains a $1 share price. Will it always maintain a $1? Has it always? No. There's been one time in history where it didn't. That was 2008. One of the big money market funds didn't. Went a couple pennies under $1. Anyways, so that's one of the ideas. The fund, let's see. What else? I also mentioned a holding company which engages in the provision of communications. Remember, I said the communications has performed very poorly this year. So here we have one listed as a possible candidate for your portfolio. It's a big one. Has entertainment products. Provides services to consumers, businesses, and government. It is primarily a wireless business. We like this stock as a defensive play in a fast-paced economic environment controlled by rising inflation and increased interest rates. It pays a hefty 6.1% dividend. That's the yield. And it has very consistent earnings. Not a lot of growth. So we name names in the newsletter, of course. So we'll tell you exactly who they are. And these are for your watch list. These are not recommendations to go out and buy it. These are positions that you need to consider for your portfolio. I've given you a little sample teaser of the KBP News Premium Newsletter. You should subscribe to it for the full edition via email. Each Saturday it will come in your box. And they also get the portfolio and consumer watch sections. I just mentioned the two. So there's 4 sections altogether. Learn more and subscribe anytime you want on InvestTalk.com. Okay, let's pivot back to the InvestTalk voice bank for a call that came in earlier from New York.
Hi, Steve and Justin. This is James from Brooklyn, New York. I had a question about Adobe. They seem to be getting hit pretty hard on Friday after the acquisition of Figma. The market doesn't seem to like that. It's in the low 290s right now, and I was wondering what you thought about the company, and is this a good entry? Thank you for all you do. Have a great day.
It is a good company. It's Adobe, ADBE, provides design, imaging, and publishing software for print, web, mobile, and dynamic media production. They're going to make $13.57 per share this year, and the estimate is for $15.90 per share next year. It's a $299 stock, so it's not cheap. But for it's at its low of the 5-year range. Maybe we should talk a little bit about the 5-year range, PE range, because I usually talk about that. Just because it's at its low of the 5-year PE range doesn't mean it's going to stop there. Frankly, I think you need to buy stocks below their 5-year range at this point in history, because that range in the last 5 years has been pretty high for tech companies. So I'm thinking all these tech companies are being re-examined as far as growth prospects and valuation, and I think you're going to see a lot of them reaching new 5-year PE range lows. So don't get hung up on it's at its 5-year PE low as a possible thing to buy because it's cheap, because they're still not cheap. It's not cheap. Now, Adobe has a great return on equity of 43%. Very good cash flow, hardly any debt. I mean, it's a good, solid company, still growing 13% last quarter, 14% the quarter before that. But remember, you're fighting the Fed. The Fed is raising interest rates. It wants to slow down the economy. And I think they will succeed. So don't be in a rush. Just don't be in a rush to buy into growth stocks. I'd stay away from them for the time being. I think they got to. The whole sector is going to be reevaluated, and not be rewarded like they were before. I could be wrong, but I don't think so. I really think growth stocks are going to be, more in line with market norms over the long term. And they haven't been for years. They have been overpriced for years and continue to be overpriced for years. But now I think we're looking at a whole different dynamic. So just be careful. Okay, the FedEx came out with their earnings and projections, and they were very disappointed, and the stock got crushed, right? And they were talking about in Europe, the Ukraine-Russia war is affecting them. But I think more important, it's competition affecting them. And I think it's coming from Amazon. I read some articles today surrounding this whole topic. Amazon has some surplus shipping space that they could utilize and start shipping other goods for other people besides themselves. And I think that is a plan that they're going to implement. I think it's already hurting FedEx and UPS. So I think it's competition. I think you have to look at it, FedEx in a different way, because competition is coming in hot and heavy, and we have an economy, world economy, that's slowing. So don't, as I just would like the ghost stocks, let it fall. You don't have to be participate in that fall. You don't. Okay? Also, Stanley Druckenmiller warns of a high probability, this is what he says, of a flat market for a decade. He says it's going to be like the 1966 to 1982 period. The market didn't just fluctuated in a flat market. And flat doesn't mean it just goes nowhere. There's volatility, and you can take advantage of the volatility. But as far as breaking up to new highs, he's not so convinced of that. Why? He quoted inflation as a big problem, central banks raising rates as a big problem, and deglobalization a big problem, and the Ukraine-Russia war, which is probably just going to drag on for years. These are the things he said that is going to hold back the market for years. In other words, it's just not going to be a very dynamic market on one direction. So be aware. Be aware. We're almost at summer, at the end of summer, I should say, and fall is coming up pretty fast. We had a nice cooling off period. Halloween, Thanksgiving, I love holidays. Thanksgiving is my favorite holiday. So I wonder what yours is. I love Thanksgiving because of sports and food. And 4 days in a row that you get off work. Of course, I don't worry about that anymore, but I used to, when I used to be a 9-to-5er. I've never been a 9-to-5er, but, a working person for somebody else. I haven't had that. Shoot, that was 40 years ago. Anyways, but I still love the Thanksgiving holiday. We're not yet in the holidays, and volatility means we still have it, and it means that you need to pay attention as usual. And, we've had a lot more volatility than normal that we have in years, in the last couple of years. Before that, the decade before that, there wasn't much volatility. Just, it wasn't as dynamic. So you need to learn how to deal with this. Many young investors have never dealt with this. And so maybe we can help you here at KPP Financial. Justin and I really do want to help people. And we can. We think we can. Take a look at your portfolio, take a look at how risky it is, and talk to you and see how much risk you want to take. Try to compare those two things. That's what we do. It's free. Doesn't cost you anything. And we're a little bit different at KPP Financial. Now, of course, I would say that, but it is true. We practice what we call parallel investing. Many investors, many money managers don't do that. The big houses don't do that. In other words, we invest in the same thing for ourselves, we do for our clients, at the same time, same price, same everything. So we're on the same side of the table with our own personal assets as our clients. So that's not common. There are people that do it, but not common. Be happy to do that. We want to do that because we want to be on the same side of the table. Now, so I think that makes us a little bit different. And if you speak to us with, just a few minutes, I think you'll find out we're very helpful and we're different. That's okay. We don't need to manage your money. We want to. That's what our goal is. But if you just want some advice, we'll give that too. We can help you and we want to help you. So give us the opportunity to do that. Let's keep moving and squeeze in another caller question from a listener.
Hello, Stephen. I have a question about Advanced Auto Parts AAP. Do you guys think it's a good buy here at this price? I just wanted to start a position here around 170, maybe even a little bit lower, because I felt like maybe it's a good value play for the coming years to come. I'm going to listen to it on the podcast for sure. Thank you. Bye-bye.
Well, that wasn't a very good recording, was it? Advanced Auto Parts, AAP, operates 4,700 retail parts stores in 49 states, Puerto Rico, Canada, and the U.S. Virgin Islands. Main competitor is AutoZone and O'Reilly Auto, two main competitors of theirs. They're increasing their earnings to $13 a share this year from $12.02 last year. Next year, $14.47. They pay a 3.6% dividend. A very well-run company. Not much debt, growing slowly, and it's near its 5-year range low. But I think you need to wait. I think it's a good company to own, but I think you might get a little bit more weakness before all said and done. This is InvestTalk. I'm Steve Peasley. We have one goal here, to help you achieve financial freedom. That's it. That's our goal for everybody, and ourselves as well. And our work will continue after this break. Questions are always welcome. 888-99-CHART.
You are listening to InvestTalk, and the market has been interesting. So you'll have important finance and investment questions, and Steve and Justin welcome your calls now. InvestTalk, 888-99-CHART.
Hi, Steve and Justin. This is Kevin from La Crescenta, California. I had a question regarding wash sales. I'm wondering if I sell a position, a stock that I hold at a loss to have tax harvested at the end of this year. Is buying a longer-term option, does that trigger a wash sale in some way? So say I sold a stock at a loss and I buy a leap on that same stock that I don't plan to sell for more than a month, I guess. Would that trigger a wash sale? The other thing that I'm wondering is if I sold this stock at a loss, can I sell a put option that's more than a month out, and if that gets in the money and I end up buying the stock back over a month from when I sold, would that trigger a wash sale? Look forward to hearing your answer. I appreciate it. Thank you.
I don't believe, and I say believe because, I don't like to talk about taxes because I'm not a tax expert, but either one would not trigger a wash sell. And for everybody else, the rule is if you own a stock and you have a loss in it, and you sell it today and take the loss, realize the loss. If you buy that stock within 30 days, it washes out that sell so you don't have the loss. Well, if you're doing options and they're more than 30 days out, no matter which direction you're talking about, then you're not really buying the stock, you're buying an option to buy the stock. Now, if you happen to buy the stock, then within 30 days, then you would wash, the wash sale would apply. You couldn't take your loss. But you were talking about longer than 30 days out after you sold the stock, so you wouldn't trigger anything. Good question, though. Appreciate the call, I really do. Okay, I-bonds. We talked about this before. We had some questions on it. Inflation bonds, because inflation is high and people are interested in conservative investments. I-bonds is a way you could help offset some of the inflation. But you're limited to only $10,000 of I-bonds. You're limited. But how can you buy more? Well, you can. There are ways to do it. One is if you get a tax refund, you can buy an additional $5,000 worth of I-bonds if you get a tax refund with that tax refund money. And the limit of $10,000 is per person. So if you're married, you can buy $10,000 each. Okay? And if you have a trust, the trust can buy $10,000 too. Or business, they can buy $10,000 too. So you can get up to what? That's 45? Okay, so there are ways you can get more than just the $10,000. But you just got to be careful. You got to understand how the rules and talk to your accountant. He'll help you with that. You should know. And finally, Russia's economy will not recover to pre-invasion, invading Ukraine, levels for at least a decade. They're already a small economy. What, $3.5, $4 trillion? That's not big. Germany's 5. We are 22, 23. China's 14 or 15. Japan is 5. A lot of European countries are near 3 to 5. And remember, Russia is a huge landmass, and they're only 3 to 5. Another one of the reasons is they're having less and less children. And no one immigrates to Russia. No one. And for good reason. Okay? So these things are going to offset. They're going to have, over the next change, limited access to Western technology because of the sanctions, right? And the war, of course, is going to linger on the way that it looks like it's just not going to stop. And so it's going to be a problem for Russia and their economy. They're going to remain a third world economy. If you look at the per person earnings for Russian citizens, it's very low. It's not very good. And remember, they have a huge energy supply, but now, sanctions are going to hurt them. It's going to continue to hurt them. I'm Steve Peasley, and this completes another InvestTalk program. Justin Klein and I thank you for listening, and we encourage you to tell your friends and family members about our free podcast. The downloads are free. Get yours at iTunes, Google Play, and Spotify. And thanks to you telling your friends about us in InvestTalk, we have surpassed 45 million downloads, and we do really appreciate that. Thank you. Be sure if you do download us through iTunes to review and rate us. That helps with our exposure. We like that, and we appreciate that too. Independent thinking, shared success. This is InvestTalk. Enjoy your weekend, everybody.
InvestTalk is a trademark of KPP Financial. Because of the nature of the interactive dialogue inherent in the format of this program, it's important for the listener to understand that not all comments made will apply to them. Specifically, nothing said shall be taken to be investment advice, or shall statements on this program be considered an offer to buy or sell security. Because such advice is rendered solely on an individual basis and at times will require that the investor review a prospectus before investing. InvestTalk is a copyrighted program of Klein, Pavlis, and Peasley Financial, a registered investment advisor firm which retains all rights. For more information regarding KPP's investment advisors, call 1-800-557-5461. Steve Peasley is president, and Justin Klein is chief executive officer of Klein, Pavlis, and Peasley Financial.